story arcs are pretty bullish right now. I mean, from the shorter lens, this incoming administration, I think, is doing things that look very disruptive at the moment, but I think structurally are really positive, because it's a path for U.S. deficit to normalize. And I think, indeed, I think animal spirits are coming back, even though things like these consumer confidence reports don't show it. And we know that there is tangible drivers of productivity, including AI, in front of us, that justify, investors allocating capital. And of course, there's still plenty of disruption ahead, including crypto. And, I think Bitcoin is still our favorite idea for this year. So we think it'll be the best performing asset class, even better than gold.
Raoul Pal, CEO of Real Vision and former Goldman Sachs executive, says the weakening U.S. dollar could boost the cryptocurrency market in the second quarter of this year. With the dollar, interest rates, and oil prices falling, financial conditions are rapidly improving and are outperforming risky assets by a few months. He said this should herald a strong second quarter for the technology and cryptocurrency sectors, and hopefully also for the second half of 2025, if these trends continue. Mr. Paul's post comes just 24 hours after U.S. Treasury Secretary Scott Bessent announced his plan to cut interest rates in the U.S. The cryptocurrency market capitalization has plummeted from over $3.2 trillion to under $3 trillion in recent weeks. Last week, the total valuation of the digital asset sector fell to around $2.55 trillion, following tariffs imposed by U.S. President Donald Trump. Trump's tariffs rekindled fears of a global trade war, negatively impacting the U.S. dollar index. According to data from TradingView, the index fell more than 3% last week. As the U.S. dollar index falls, the cryptocurrency market appears to be recovering. According to Raoul Pal and Tom Lee, 2025 might be the most bullish year for crypto. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
You and I are obviously thinking through the AI in the same way. We're about to produce infinite workers. AI and robots is infinite human intelligence and infinite humans, right? I mean, this completely breaks the economic model. We have no understanding what this is going to do. But let's assume we'll get there whenever that happens. You're starting to even hear Satya Nadella start thinking, and this might be, I want to go back to the psychology of 2000 that many of these people worry about, is they're worrying about, have we overbuilt? Or are we overbuilding data? Are we overbuilding chips? Are we overbuilding? I'm not sure that we're not still underbuilding, but we might be scarred. And I haven't decided, but where do you think we lie on this? Is this an overbuild and everyone's going to write off a whole bunch of capital, or is this still too early to say? We are so digital now. We're going to become more digital. Our roles in whatever a workforce is or the economy is going to change, but tomorrow will be more digital than today. That is a fact, and that is not going to stop for the rest of our lifetimes. So it's going to cause an equal and opposite reaction. And if you look at the rise of LVMH, there's something in that story which is equivalent to your pizza, but the luxury pizza. Somewhere within this is going to be an equal and opposite story that's going to be immensely valuable to us as humans. It's interesting that, a lot of people use Tom for where do you think the S&P is going with the next 3 months? But I was more interested in the bigger picture and how to think this all through. And I think it's fascinating. I'll definitely get Tom back to talk more about this stuff in due course and to find the investability side of it. Because in the end, we all want to make money out of our own disruption over the coming 5 years or so before we get to this economic singularity when nothing makes sense anymore.
Paul predicted that the current cryptocurrency market bull cycle, initially expected to peak in 2025, could extend into 2026 due to a prolonged economic cycle. Paul addressed the chaotic market situation, reassuring cryptocurrency investors facing high volatility and explaining why he believes the cycle's expansion is consistent with broader economic indicators. The veteran macroeconomic analyst noted that the sluggish economic cycle, below the key threshold of 50 on the ISM survey, a measure of economic activity, is now showing signs of expanding, pushing back the cryptocurrency market's peak. According to him, the economic cycle takes time to continue below 50 and is just beginning to expand. This has likely extended the cycle into 2026, he said, adding that this shift is not yet a firm prediction, but a structural observation based on current data. He links this extension to improving financial conditions, including a weakening U.S. dollar and expected lower interest rates, which he believes will boost risk assets like Bitcoin and altcoins. Paul pointed to Bitcoin's recent plunge from a high of $110,000 to $80,000 and Solana's 53% price drop as signs of volatility typical of a bull market, urging patience. Paul's analysis, supported by global M2 money supply charts illustrating growth, suggests that following an unstable period until mid-March, prices could accelerate in April, May, and June of 2025, with a further spike in 2026. Paul advises against leverage and overexposure to small altcoins and advocates for a portfolio anchored in major cryptocurrencies such as Bitcoin, Ethereum, and Solana. He highlighted Solana's oversold value relative to the global M2 as a buying opportunity, predicting it will outperform Bitcoin and Ethereum until the end of the cycle. Solana is expected to outperform Bitcoin for the remainder of this cycle, as well as Ethereum, with Sui outperforming Solana, he said, dismissing rumors of its demise amid the cryptocurrency meltdown. Drawing on extensive research from Global Macro Investor, Paul linked the cryptocurrency's trajectory to macroeconomic factors such as the ISM index, which he predicts is expected to climb above 60, potentially propelling Bitcoin past $300,000. Fundstrat's Tom Lee recently shared his bold prediction that Bitcoin will outperform gold this year, despite its lackluster first quarter performance. Lee expressed confidence that Bitcoin would become the best performing asset class, even surpassing gold. He highlighted that Bitcoin remains his top pick for 2025 despite its recent fluctuations. Bitcoin reached $85,000 but is still more than 20% off its all-time high. Conversely, gold performed strongly and reached a new record high after a solid start to the year, outperforming Bitcoin in the first quarter. Lee's outlook for Bitcoin extends beyond this year, as he previously predicted the cryptocurrency could surpass $150,000 by 2025. While his past predictions have been mixed, Lee's influence as a Bitcoin analyst remains significant. Looking back on his career, Lee recalled his first encounters with Bitcoin at JP Morgan when the network was only worth $20 billion. He was particularly intrigued by the cryptocurrency's meteoric rise in 2017, which led Fundstrat to publish its first report on Bitcoin when the asset was valued at around $1,000. Lee believes the markets are stabilizing and can bottom out this week. The futures market is currently pricing in a 75 basis point cut this year, which would put the federal funds rate in a range of between 3.5 and 3.75 by year end. To date, the Fed has already implemented 100 basis point cuts during this cycle. Lee also addressed Bitcoin's woes, emphasizing that its recent decline is not due to negative news, but rather cyclical market forces. He sees a potential short-term price target of $62,000, but still believes Bitcoin will surpass $150,000 by the end of the year.